So presenting next, we have Executive Chairman of Kinetiko Energy, Adam Sierakowski, with the ticker code KKO, a company focused on exploration onshore shallow conventional gas opportunities in South Africa. So to tell us more, Adam, I'll hand over to you.
Thank you very much. Look, let me just start by setting the scene for you. So South Africa is a country with an enormous energy crisis. It's a situation where millions of people in South Africa do not have access to reliable or affordable energy every day of their lives. And it's a solution that Kinetiko, through its recent enormous onshore gas discovery, thinks it can play a major role. The asset itself, which we've discovered, it's situated down there. You can see equidistant between the capital city of Johannesburg and the major industrial centres of Durban and Richards Bay. As I said, Kinetiko has been a focused onshore gas explorer, and it has now discovered this advanced shallow conventional onshore gas discovery. But even better, it's discovered it right next to existing infrastructure and a multitude of clients. Just a few highlights. In terms of the company's vision, the situation of the crisis is one where there is no solution for the immediate future. South Africa's coal-based power load is in absolute decay and cannot be recovered. And the other source of energy, which has been gas, which comes from Mozambique, is entering a period of steep decline. And there are no other obvious energy solutions on the horizon. So we think Kinetiko's got a really important opportunity for the country to try and bring this asset out of the ground as quickly as possible. And a big part of that is the 5-well drilling program that we're about to commence in just a couple of weeks. And that test program we expect to be highly impactful and produce a lot of news flow. That program is going to bolster the existing enormous resource that the company already has. It's currently 6 trillion cubic feet of gas in a 2C contingent category. That resource was certified late last year by internationally recognised group Sproul, but we absolutely believe that that resource is going to get a lot bigger. And finally, there is the fact that what we've discovered is pretty unique geology from what we can assess. It's, as we said, shallow conventional gas, and this is leading to a model where we see ourselves as being a low-cost and low-risk developer. Just a little bit more on South Africa's energy crisis. Many of you may not be aware that it is a huge crisis. South Africans experience daily blackouts of up to 12 hours a day. This creates enormous economic and business damage. It's called load shedding. You can see from the graph at the top right there that it has been going on in South Africa for years. This is a direct correlation to the decline of the coal-based power. But in addition to that, we have this gas cliff, as they call it in South Africa, where the existing gas that's been provided from the Pande Mane field in Mozambique, and has been a very reliable source of energy for South Africa that you can see for over 20 years, is now in steep decline. So here's our asset and what we believe to be our solution. It's situated in a wonderful position about 200 kilometres southeast of Johannesburg. Most importantly, it exists there near existing infrastructure. So the major takeaways are the red dotted line is that pipeline that comes down from Mozambique that goes into the red square. That is Sasol's Secunda refinery, one of the biggest in the world, coal to liquids, and is now gas to liquids. And what Secunda doesn't use in terms of its gas is reticulated primarily down the Pink Lily pipeline, equidistant through our rights to the industrial centres of Newcastle onto Richards Bay and Durban. We also have the Black Diamonds, which are the South Africa's largest coal-fired power stations. Some of those are obvious targets to take our gas to co-fire their coals, but also provides an abundant high voltage and energy infrastructure in the region. Just on the right, again, a couple of key points to note is that we've been drilling, particularly in our active rights, for a number of years, and what we've seen is incredible consistency in our geology. We've intersected strong gas in every well we've drilled. That, as I said, has led to that significant resource certification, which just happens to be the equivalent of 1 billion barrels of oil. So that's a really, really significant in situ value that the company already has in the ground. We did achieve maiden reserves last year of 6.4 BCF in a 2P certification, and that was certified but only over a few pilot production wells that we've been able to bring online, and that represents most significantly but 0.2% of our total granted tenure. So one of the obvious opportunities of the company is to now go and drill more test production wells and constantly increase its reserves and build these up by an order of magnitude. Just quickly, just in terms of, I mentioned that resource growth, which we say is virtually guaranteed. We have in the rights out to the west in the opaque green a really significant bit of acreage, which is in a application phase. We expect to be granted over the next 6 months, and when that's brought into our portfolio, we expect that to then be the source of a really significant resource growth. I think when we think about an asset of this size, an opportunity, it's a great thing what we can do is to look at having multi-site development. So as I'll get to in a couple of slides, we think we've got an opportunity to look at developing production clusters right next to the existing infrastructure and right next to the clients that need it most. And further to that, having an opportunity to grow this size of this asset with Indigenous government partners is really important as well. And we already have a legal agreement in place with the Industrial Development Corporation of South Africa, which is incredibly reputable and recognised government funder. And certainly we look forward to growing our opportunity with them significantly. A little bit about the development characteristics. As I said, this has been a unique discovery that we've found. It's not a CBM play. We don't frack. It is shallow, conventional onshore gas. What we've discovered is that this gas sits above the extensive Karoo Coal Basin and in these sandstones and carbonaceous sediments, and it's been trapped by these very, very large volcanic sills and dikes that cover the whole region. Not only have we found the gas, but where we've been able to test it, it's really high quality, 96 to 98% measured methane, just a little bit of nitrogen and virtually no impurities. We were able to take that a step further in May this year. We took one of our pilot production wells and we plumbed it into a 1.2 megawatt gas generator, and we were able to produce electrons in a first of its type demonstration in country. And you can imagine that was enormously powerful as a demonstration in South Africa, the potential of our asset. And indeed, it goes to that green box where it will also be really credible in terms of decarbonising South Africa's energy. So our development strategy, the company thinks it has a clear sequenced execution strategy. The focus of that has been for the last few years, exploration, drilling wells, drilling them in a variety of areas across our tenure, and seeing if we can prove that the geology and the gas potential is ubiquitous, and so far we have. So the next step is to take that and see if we can now produce gas in areas where it's going to be needed most. So that's where this 5-well production test program is about to commence in a couple of weeks, and we're incredibly excited about that. However, that's not the end of it. Off the back of that, we have this legal joint venture with the IDC, as I mentioned. That will be stage 3. At the moment, that looks like approximately 20 production wells to feed a micro LNG train. We expect that to continue to be rolled out and hopefully completed over the next 18 months, delivering first revenues to the company. Stage 4, we have low-hanging fruit in terms of corporate opportunities. I mentioned the granting of the exploration rights, significantly increasing our resource potential. But the company's also commenced its application for a production right. So we're looking to have that in place over the next 12 months as well. And finally, stage 5 is a bit of blue sky. I think it points to the enormous political goodwill that we have in country to drive an energy solution. We have that legal agreement with the IDC, but we also have a non-binding term sheet with the IDC to develop South Africa's largest LNG project. That has 2 phases. At phase 1, it envisages a 50 megawatt equivalent opportunity. That sort of looks like approximately $140 million Australian. And then phase 2 will grow to a 500 megawatt opportunity. And the IDC have structured it incredibly attractive fiscal terms with the company to undertake that joint venture. In terms here of in terms here of a near-term strategy, and what's really important is news flow. The company is entering a really strong news flow period. Probably the most important line on the Gantt chart, as I've mentioned, is that yellow line. The production wells, we expect to spud the first one in about 2 weeks' time. There will be 5 consecutive wells. Each well will be spudded, then completed. Then there will be initial flow rate observations, and then after some depletion testing, some follow-up flow rate observations as well. So that 5 times over is going to produce a lot of news flow over the next 8 or 9 months. But it doesn't stop there. Then we roll into the IDC joint venture and another series of production wells, which will see us have a lot of news flow through the remainder of calendar year 2025, and indeed some other corporate objectives down the bottom there as well. So here we have really the crux of what we want to do. What's really significant over this next period is this production test program. What we wanted to show you here with the map on the left is how impactful these drill wells can be. There you have our first well. It's going to be located up near the Majuba power station. That power station was one of the biggest in South Africa when completed, and has been in decline as the coals that go into it are dirtier, deeper, and more distant from it. Ironically, it has infrastructure in place to co-fire using our gas. So our gas could be a really strong solution to lift the calorific value of what coal they have left. So there's the hole we plan. It's only several kilometres away from the Majuba power station. And if successful, we believe that reservoir there could host well in excess of 100 wells inside the blue diameter. Beyond that, we have the second well that's going to be drilled right next to the Lily pipeline. And again, the same assumptions apply. And then wells 3, 4, and 5 are spatially, strategically diverse, again, to show that if we can have successful flow rates in these regions, we'll truly show that, that this geology is ubiquitous. Just a little bit on the assumptions that surround this drilling campaign. The wells are not expected to be that deep. They'll typically go to 500 to 700 meters in depth. They'll cost about $400,000 US for each of the wells. So as you can appreciate, that's extremely cheap drilling. And in terms of our flow rate objectives, the Sproule reserves report identified an assumption that flow rates greater than 50,000 cubic feet of gas a day are going to be robustly commercial. So we're extremely confident that we're going to be able to produce flow rates well in excess of that. And as I said, we would like to think that the first of these flow rates will come in as the first well gets completed by about mid-October. All right, so bearing in mind, I thought we had a very quick slot today, Jane. I'll leave it at that and ask any questions.
Wonderful, Adam. Thank you for the great presentation. I'll get you to stop sharing your screen and I'll jump into them. So, and you touched on this in the presentation, but it's no secret that the aging coal energy supply is playing a major factor in South Africa's current energy crisis. So tell us, why is Kinetiko's project one of the only viable near-term options for the company? And what does it mean for big existing players like Sasol in the region that are coming out of supply?
Yeah, so Jane, we just got a really unique opportunity. I mean, no one believed that there was going to be economic formations of gas in these shallow sandstones. So we're a first mover that's been able to discover this, and that, I suppose, associated with the rapid decline of the coal situation and these Eskom-run coal-fired power stations, which is obviously the source of that major load shedding that I said earlier that so many people suffer from, is the opportunity we have. And the other part of that is, you mentioned there's just been no alternative. I mean, South Africa's tried nuclear and failed. South Africa's tried some renewable energy, but as we all know, that's not really a base power solution, and it's still a long way off. There is no immediate opportunity to draw gas from Mozambique or anywhere else. So at least for the next 10 years and beyond, South Africa's crying out for an energy solution. So we're seeing this in the political goodwill too in the country to really try and drive our project now that the discovery's shaping up.
Wonderful. So next one, you're about to kick off a 5-well test program, which should prove up the commerciality of the project. So how do these wells differ to the previous wells you've drilled? And what range of commercial data should we be looking at these wells generating to prove the project is commercial?
Yeah, so Jane, look, the first couple of pilot wells we drilled a couple of years ago were up to the north, and that was off the base of our early core drilling that we've done, and they were successful, and they formed our first small that proved we have a commercial opportunity. But what's exciting for us is that as we drilled more core wells, we found even gassier geology. So we're now drilling these pilot production test wells into that more significant geology. So the Majuba production well is drilling right next to a core well that we announced to the market as one of our most successful over a year ago. So we're really optimistic about what those flow rates could look like. And indeed, then to your second point, Jane, what we want to do is not just show early flow rates, but do some sustained flow testing so that we can have great modelling for our project going forward.
Thank you, Adam. And just finally, so are you fully funded for the upcoming drill program, and how long will each well take to drill?
Yeah, so the company has had terrific backing from a variety of really high net worth and long supporting shareholders. So we finished a rights issue a couple of months ago to fund this drilling campaign. And, if we get it right, we think the drilling campaign will be effectively completed by Q1 next year. So the first well should be spudded and completed within 4 to 5 weeks. And then because of this geology, we can move the rig on to the next well really within a week. So we think we can do these wells quite efficiently consecutively.
Wonderful. Well, thank you again for the great presentation. That's all we've got time for today. If there has been any questions that have been missed, I would encourage you to reach out to the contact details on the bottom of the ASX releases. But thanks again for your time.
Thanks, Joan.